The U.S. imposed escalating tariffs on Chinese goods, increasing the levy rate to a substantial 125%. This action triggered a global trade war, impacting stock markets worldwide. Trump cited his protectionist agenda to revive domestic manufacturing. The tariffs built upon previous levies, escalating from 10% to 20% and then to the current 125%. China retaliated by raising its tariffs on U.S. imports to 84%. Trump threatened further tariffs if China didn't lower its own levies. China's Commerce Ministry responded to Trump's actions, stating that the tariffs would hurt the U.S. economy and not address its problems. China's ministry defended its reciprocal tariffs as necessary for safeguarding its interests. The escalating tariffs are expected to negatively impact China's GDP, potentially reducing growth by 2.4 to 4%. This comes at a time when China is already experiencing slower growth, deflationary pressures, a struggling property market, and high debt levels. The Chinese government is actively working to mitigate the effects of these tariffs. They are focused on stabilizing the stock market and bolstering investment. China's Premier Li Qiang stated the government's ability to handle external influences. China is likely to adopt domestic stimulus measures and strengthen ties with other trading partners to reach its growth target. Possible actions include reducing interest rates, increasing government spending, and easing conditions for exporting businesses. China might subtly increase exports to nations in the global south, potentially through loans or debt relief. The possibility of yuan depreciation to offset tariff losses also exists. China's large economy should handle the strain, though concerns regarding its fiscal health persist. Some analysts, however, highlight a potential Western tendency to overestimate the imminent collapse of China's economy and are instead concerned about the effects of trade wars on the U.S. economy. If you like our content, don't forget to like and subscribe to our channel, News Today.